Hi folks, this is Ash. I hope you'll be looking forward for the holidays and exciting new year. This is the last vlog for this year, bringing you what's happening in the real estate world. So, Trev have reported 4,500 homes sold during the month of November. This is down 49% as compared to November 2021, but remaining at a similar level to the October, especially after considering the recurring seasonal downward trend in the fall. New listings are down on both year-over-year basis and month-over-month basis. Home ownership market activity in November continued to influence by the impact of higher borrowing costs on affordability. Sales are down markedly compared to the same period last year, as we have just witnessed the seventh consecutive interest rate hike. What I'm seeing in the market is that updated properties with the right market price are still finding buyers, as some buyers understand that somewhere in 2023, as soon as the interest rates start coming down, they will end up paying more for the same property. So they are availing the opportunity now. This year, Bank of Canada have increased rapidly their policy rate, starting from 0.25% in March to December 4.25%, bringing higher prime rates and higher mortgage rates along with it. So in 10 months, they have increased 4%. We all know the interest rate across the globes are increasing. Governments are trying to curb the inflation. Canada's inflation rate is sitting at 6.9%, which is far better now than many countries in the world. In my opinion, the government went too fast in increasing the interest rate, putting too much burden on many Canadians who are not only finding it difficult to pay the price of inflation, but now also find it difficult to pay higher mortgage payments, line of credits, and other debts. A rise in interest rates makes it more expensive for firms also to expand. That is, in turn, could lead to cut in investments, ultimately hurting employment and jobs. Experts believe that somewhere in 2023, government will start decreasing the policy rates, but they also shouldn't forget about the Canadians who are already finding it difficult to make ends meet in this increasing cost of living. If you're hearing the news, the forced housing push comes as the government attempts to get 1.5 million homes built in 10 years. While high inflation and interest rates have already forced the province to revise projections for housing starts downward, Ontario expects to build fewer than 80,000 new homes a year in the next couple of years. One of the most controversial aspects of the bill is freezing, reducing, and exempting fees developers pay to build affordable housing as well as some rental units. These fees go to the municipalities and are then used to pay for services to support new housing. Meanwhile, the government is still accepting public feedback. It is proposed to amend to the Greenbelt Act, if approved, would remove 7,400 acres from the protected land, but also about 9,400 acres to the Greenbelt elsewhere. It is a bid to build at least 50,000 homes in GTA Authority homes, such as road and sewer infrastructure and community centers. Now, critics, however, say freeze on the development and parking lot charges they are normally expected to pay municipalities to cover the cost of new infrastructure needed to keep up with growth. It will lead to higher property taxes, weakening conservation authority powers, and not actually making homes more affordable. As the year end approaches, I wish you all the happiness and joy for the holiday season. I wish you and your family all the very best and a healthy and happy 2023. Take care.